Kitco News here in Toronto for the Mines and Money Conference, and with me now is Frazer Tabeart, managing partner for PolarX. Frazer, a little grayer than the last time I saw you in Noosa. Good to see you again.
I thought you meant me rather than the weather.
Good one. Last time we spoke, we were talking about the boom we were seeing in Australia, and as I was saying to you offline, I was at Beaver Creek, I was at Denver Gold. I haven't seen this many delegates from Australia in a very long time. Why the fever here?
Well, I think Australia's always liked gold.
Of course.
And I think if you look at a couple of things, so the gold price in Australian dollar terms is still very strong. So we're seeing Aussie gold in that sort of $1,700, almost $1,800 an ounce at the moment. We're seeing a lot of good projects and good companies that are being developed. So there's a number of sort of mid-tier, getting seriously sort of big players on the global market. And I guess that's driving them to go into M&A at an ever-increasing rate. So you're seeing M&A, that's leading to more money, and then even exploration is starting to get really good dollars flowing into it now.
Speaking of M&A activity, obviously we saw the big news, Randgold Barrick leading the charge here. Do you think we're going to continue to see more mergers and acquisitions?
I think you probably will. I think gold's one of the unique sort of commodities where in many ways bigger is better, and you see that with companies that are in that sort of billion-dollar market cap always looking to increase the size of their resource base. So it often comes down to how do you keep replenishing resources, and often it's easier to acquire than it is to discover. Discovery rates have dropped, so I think that leads us into M&A activity, which will then probably flow back into exploration, but that's much longer lead time.
Because I was going to say, is there a negative in the sense that if we're seeing all these acquisitions that we're not seeing as much exploration?
I think it has sort of dried up the capital to some extent,
right.
But at the same time, if we look at the big players, they've got very healthy exploration budgets, so it's happening. The discovery rates have dropped. I think that's probably a reflection that people are going undercover. So people are still exploring in good jurisdictions, but most of the easy deposits have been found. So as you explore deeper, it takes longer, it's more expensive. So the rates just drop in terms of how many deposits you discover.
But what do you mean by undercover?
So, if we take Australia as an example now, the first sort of 100 years of exploration there was really focused in the top 20 or 30 metres.
Right.
Most of that's been pretty well prospected now. To find something that's sort of 50 metres below cover, particularly if there's no chemical link between the deposit and the cover, you have to start using geophysics. You can't see the deposit at surface, so it's more indirect rather than direct exploration. And the deeper you go, the harder that becomes. Just technically and commercially, it gets more and more expensive because you have to drill deeper holes, more of them. So it's something that the whole industry is grappling with, and a lot of sort of research initiatives in Australia, certainly in the last 10, 15 years, have been geared around techniques to look 100, 150 metres below cover. And that's starting to happen all over the world now. Most of the easy near-surface deposits have been found. You'll still get some that are being discovered, but the discovery rates have dropped right off. So we're now opening up this whole new window, which is sort of deeper than 100 metres.
Can you say we're at peak gold then?
I don't believe we are. Okay. I think, if you say, are we in peak gold of discoveries in the top 100 metres, that probably happened 10 or 15 years ago. But there's no geological reason why the next 200-300 metres isn't as well endowed, if not better endowed. It's just harder to find things. So the discovery rates slow down. Maybe that prolongs the industry. But it makes exploration more expensive. So eventually, if you believe in true economics, then that should flow through to an incentive price that has to be higher. So it should mean strength in commodity prices going forward.
Frazer, let's get an update on PolarX now. When can we expect the next big announcement?
Hopefully fairly soon. So we've had a great year. So we did a very successful drilling program, which we closed out in early September. I think last time we met, we were talking about what the drill core looked like, but we hadn't seen any assays at that point. The assays have come back. We've got them back for about a third of the holes to date. They've been fantastic. So we've got really good thick intersections up to 850 metres east of where our resource was, and those are thicker, high grade and very close to surface. So we think there's a good chance of an open pit position developing there. We've got more assays to come over the next, I think, 3 to 4 weeks. And we've also we finished an airborne magnetic survey in September. We haven't published the data for that yet. We've only literally just received it in the last few days. So we're now working that up to put some material out on that. But the preliminary data looks awesome. So that's going to give us lots of drill targets for next year, including hopefully some really refined targets for the source of all this copper and gold, which we hope to be a major porphyry copper deposit.
Frazer, I look forward to the next update. Thank you so much for stopping by. Thanks for joining us.
Pleasure. Thanks.
And thank you for watching. We'll have much more for you on Kitco.com. Thanks, Frazer.